welcome to the 2 days CPE conference. The next 2 days is fully jam-packed with various subjects, and we have very eminent speakers taking each technical session. So, in this regard, I would request the Bangalore Branch Chairman to escort today's first speaker of the day, Naveen G. Khariwal, onto the dais and hand him over the floral bouquet. I request our chairman to welcome the members.
Today's speaker Naveen Khariwal sir, Secretary Pramod, Managing Committee members, and my dear friends, happy morning to you all. I welcome you all for this 2 days mega conference. As you all know that we have to comply with the CPE credit block of 2022 in this month itself. In this regard, when we organized this program, when we requested our senior speakers, even in their busy schedule, because a lot of members they are busy in filing their 99C and deadline of filing their income tax returns which are not filed within the due date, even then they agreed and they agreed to grace the occasion and address our members. I thank all the members on behalf of Bangalore branch of ICA. When we requested our Chief Commissioner Income Tax Bangalore 2, Prashant Bhushan, he is also in his very busy schedule. He is attending one meeting in Bombay and is landing around about 10:30, 11. He may also come for this program. Once we come, we will have an inauguration program. Without much taking your time, we will start the program immediately. Thank you. Welcome you all for this program once again. Thank you.
Thank you, Chairman. Now we'll start with our first technical session, practical issues in cash transaction under income tax and issues in income tax scrutiny by CA Naveen Khariwal G. I would like to take a privilege in introducing him. He is a qualified BCom and a practicing chartered accountant, a partner in Messrs. H.C. Kincha & Co. and H.C. Kincha & Associates. He comes from a family of chartered accountants, grandfather, father and brother. Entire family is of chartered accountant. He specializes in direct taxes. He is also a co-opted member of the Direct Taxes Committee of ICI for the year 2021. He is currently the member of Central Taxes, Corporate Law and GST Committee for Federation of Karnataka Chambers of Commerce and Industry. Currently, he is a member in Finance Advisory Committee of the Karnataka State Cricket Association, Bangalore. Currently a member of Study Circle, Study Group of the Committee of Chambers of Tax Consultants, Mumbai. He was also part of team nominated by Bangalore branch of SIC of ICI to represent before the Honorable Justice R.V. Ishwar Committee for Simplification of Taxes. He is a speaker at National Conference on Direct Taxes organized by the Direct Tax Committee ICI and hosted at WIRC jointly with other branches. He is a regular speaker at various seminars organized by various branch of Institute of Chartered Accountants of India. With this brief introduction, I would like to welcome you again, sir. Without coming in between participants and the speaker, I would like to hand over the dais to Naveen G.
Good morning, members. Thank you for the introduction, Pramod G, Secretary of Bangalore branch. My chairman, Srinivas G. This is probably the 7th time I am addressing under his leadership here this year. And it gives me a high to end the year. There are more than 600 members who have registered for this conference. And probably before the COVID, there is a spike in COVID. No, this may be one of the biggest conferences probably at Bangalore before COVID. The topic to be deliberated is cash transactions and FDI. Now, as you can see, the government has been taking a stringent line, stringent action towards entered into by businessmen across India. You see, this ritual has started way back in 1984 itself. Pranab Mukherjee was the finance minister under leadership of then Prime Minister Indira Gandhi. 1984 itself, they introduced 40A3, 269SS, 269.3, etc., etc. Now, how many sections are there in the Act which would impact the cash transactions? Basically, if you see, we will start with 11, Section 11, Section 80G. So, in case of charitable trust, in case of Section 11, Section 12, there is something called as application of income and it's not expenditure. So, for application also, they brought in an amendment, Section 40A IA, Section 40A3. Main thing is 40A3. Shall mutatis mutandis apply to these charitable trust institutions under Section 11 as well as under Section 10 within bracket 23C. All your medical institutions, educational institutions, etc. So under Section 11 as well as under 1023C, to all these charitable trust and institutions also, this 40A3 would now apply. What is the end result? End result will be if there is any transaction in excess of 10,000 by way of cash, it would not be allowed as an application. Matter ends. Then 80G. There the limit they are telling is 2,000 rupees. Beyond 2,000 rupees, if you give a cash donation, I am sorry, you cannot claim in your return of income. Matter ends. The charitable trust can very well, get a donation more than 2,000 rupees. No problem, they say. You have your name, address, PAN, etc. I am not going to consider as anonymous donation, no problem. But the donor who gave a donation of 2,000 and above, by any mode other than cash, I am sorry to say, you cannot claim deduction or under Section 80G. Third section. Come to your fourth section. What they say? Your 13 political parties. Under Companies Act itself, political party cannot receive a donation from a company of even ₹1 other than check, other than cash, basically. So under Companies Act, they are barred to give ₹1 to a political party by way of donation. So 13A is also telling there are certain conditions subject to which a political party can claim exemption of its income. Maintenance of books of account, audit of books of accounts. You take the name, address, PAN of the donor, etc., etc. Then they say, in case of companies, so they are telling if any donation comes even more than ₹1 in cash, don't claim exemption, pay tax 39. Go further. What about 40A3? 40A3, no problem. Are you claiming as expenditure? Is it debited to my P&L account? Yes, sir. I am claiming as expenditure 10,000 rupees. What to do, sir, beyond 10,000? Absolutely no problem. Go on splitting. 9,000. Tomorrow 9,000. Day after tomorrow 9,000. Allowed, sir. Legally valid. Legally valid. Atar Singh, Gurumukh Singh, Supreme Court judgment. Absolutely no problem. It is there. Once you complete 40A3, then you come to 43(1) actual cost. Any asset you purchase, for example, you purchase a computer. Beyond 10,000, if you purchase in cash, other than account pay check, they say account pay check, account pay draft or ECS. Other than these three modes, if you purchase any asset beyond 10,000 rupees, I will not allow you depreciation. They say the cost shall be ignored. When they say the cost is ignored, it will not enter the computation, it will not enter the WDV, it will not enter my depreciation schedule at all. Once it does not enter my depreciation schedule, what is the end result? Suppose I have to sell the asset in future. No question of Section 50, sir. You can't apply Section 50 because it's not a depreciable asset. I have not claimed depreciation. So they are telling cost shall be ignored. For the purpose of claiming depreciation, I cannot claim because it is purchased by way of cash. Government is taking steps. 40A3 is done, 43(1) is done. Then in between there was 35AD. What was 35AD, sir? All that special businesses. All the special business they are telling any capital expenditure allowed as a deduction. Earlier it was weighted deduction. All that weighted deduction is now gone. 100% now only. It was 150%, 175%. So 150% 35AD. They are telling capital expenditure was very well allowed. All of you know. Even that 35AD now capital expenditure beyond 10,000 not allowed, sir. We are not going to allow the capital expenditure. Move forward. You are going to come to section 68 now, cash credit. What about section 68 cash credit? Nature and source. You deposit 10,000 rupees in bank account. What is the nature? What is the source? During demonetization period, for example, they deposited, sir, this is out of my sales amount. The courts have frowned upon the assessing officers. You have taken the sales and you have made an addition under section 68, but you have not challenged the opening stock. You don't tell anything about opening stock. You don't tell anything about purchases. You have accepted closing stock. You have accepted opening stock. You have accepted purchases. But I disbelieve the sales. So you remove sales arbitrarily. You remove the sales from the trading account already offered to tax. What is offered to tax? The net profit or the gross profit which is subsumed in the sales. The income is already merged. What can be taxed? In case of a search or survey today, take for example a search takes place. There are unaccounted purchases, unaccounted sales. What have you to tax? The net result always, what is the income? That unaccounted purchases is sourced out of unaccounted sales. What is to be taxed? Only the profit. Umpteen judgments there. So the courts have frowned upon these additions made by the assessing officer, more so because it is as high rate of tax is 60% plus 25% surcharge, 60 plus 25, 15, 75 plus 4% health and education cess, plus penalty under 115 BBE, which is 10% of tax, 10% of 66. 85% rate of tax. I am going back regressive in nature. I am going back to the 70s when the rate of tax was 95%. So anyway, it is a crystal clear. You are going to win the case hands down. There is 1 lakh sales. I have offered myself, I have created rule 114P. How can you dare ask me the name, address and PAN of the customer? When the rule itself says beyond 2 lakhs you are not supposed to ask. How dare you ask me the name, address and PAN? Take the rule 114B. There are 5 Supreme Court judgments which says rule. You cannot override a rule. It has to be strictly interpreted. Follow the rule. They are telling you, the assessing officer, you follow the rule. What is the rule says? Varatari Singhania Supreme Court. Lot of Supreme Court judgments are there. You have to follow the rule strictly. Rule says beyond 2 lakhs you are not supposed to ask the name, address and PAN of the customer. How can you ask? How can the assessee give 2 years over, 3 years over, 10 years over sales? Today you are telling me give the name, address and PAN of the customer. Not possible. Have I credited to my books? Yes, sir. Have I offered to tax? Yes, sir. It is credited to my P&L account. Have you disbelieved the purchases? No. Is there stock shortage? All these points have been argued there. Is there stock shortage? You see my books? No, sir. There is no stock shortage. The sales is backed by adequate stock. So therefore, no question of any addition. Move further. 68. When I move further, I come to your 269 SS, 269 T, 269 ST. What about 269 SS? What about 269 T? Again, you know, when you go back, in the memorandum itself says during those days, when there was search, seizure, etc., during those days, what they used to say, any unaccounted cash, sir, this is a loan, sir, I took a loan. And that creditor also will oblige you. Yes, yes, I have given a loan. So it is explained and no tax. So they told nothing doing now. Basically, it should be a genuine bona fide transaction. What is the limit? Earlier it was 20,000. I mean, your 48.3 was 20,000 earlier, it became 10,000. Now this limit is also unchanged. 269 SS, 269.3. What they say the words are loan, deposit, or specified sum. So says 269 SS. 269 says loan, deposit, or specified advance. With effect from 1st of June 2015, there was something called a specified advance, specified sum introduced in the Act. What it says, suppose I were to enter into a purchase of immoral property with Mr. Pampanna, I gave him an advance of 2 lakh rupees. Very good, sir. 1st of June 15 itself. I gave him advance of 2,50,000 rupees by cash. So this section says it's a violation. Don't worry, sir. Don't worry. There are umpteen judgments. 273 when you go, they say, go behind the facade. The provision is there, fine, it's a violation. I took advance in cash or I gave advance in cash, fine. But find out the genuineness, the bona fideness. Why have you given? What forced you to give a loan in cash? Or what forced you to accept loan in cash? Reasonable cause. The word used is reasonable cause. And the 273B as against good debt sufficient reason in 269 ST. Give a reasonable cause, sir. I purchased land from agriculturist, sir. He has no bank account. It was a Sunday that day, sir. Bank is not working. There is no banking facility in the vicinity of agriculture land. I can get the agriculturist in front of you. I have his Aadhaar, I have his PAN card, I have the sale deed. And I have purchased the land out of my known and disclosed sources of income. So the courts have accepted, yes sir, we agree with you. We are only more interested, the courts are telling we are more interested whether it is sourced, it is out of source money or unsourced money. It is out of the disclosed sources, I have no problem. I will accept the transaction, I will drop the penalty. 100% penalty. If I were to purchase the land from Mr. Pampana, say 10 lakh rupees, by giving cash you are telling me 10 lakh rupees penalty. It is 10 lakh rupees penalty they say. Whether or not the transfer takes place again. Again, 269 SSNT, what are they telling you? Enter into an agreement for purchase or sale of goods, whether or not the transfer took place. So anyway, what I am telling you is there are ample judgments for the associate, and this presentation is there around 440 slides I have made. Around about 100 judgments are there, all in favor of the associate. Every judgment is in favor of the associate. The speciality of this presentation, like my demonetization presentation, where all judgments were in favor of the associate. I am not denying that there are judgments in favor of the revenue also. I am not bothered about them. When I have to, defend my claim or defend my case, I need to be positive enough, and I am going to, try to fit in the problems in these judgments. These are the judgments. So that takes you up 269 SS, 269D. Again, proviso to 269 SS says what? I have given loan or I have taken loan. That fellow is also agriculturist. I am also agriculturist. The borrower and repayer both are agriculturists. The person who has given the loan, person who has taken the loan, both are agriculturists. No problem, they say. You prove that you are only agriculturist and you have no income chargeable to tax. How it is possible, sir? You are telling me section. Suppose Deepak is an agriculturist, I am an agriculturist. I am going to ask him, prove that you don't have any taxable income. He is not going to share his return of income with me, basically. He may tell, who are you to ask me? I am not going to give the details. Anyway, but there is a class. Both are agriculturists and both do not have any income other than agricultural income, which is taxable, beyond the taxable limit. Moving forward, sir, identity. There are three things, genuineness and creditworthiness of creditors. How to prove? Confirmation letter with name, PAN address, bank account statement of the creditor, your own bank account statement, return of the creditor ITRV, source. Now the section is very dangerously worded, sir, 68. It is source of source. Finance Act 22, they have made an amendment. Source of source also can be questioned. If I have taken loan from Deepak, Deepak took the loan from Bhartesh. So I am giving confirmation, but they may ask me, what is the source of? Yes, sir, Deepak has given confirmation. What is the source of loan to Deepak also? They are very well bound in the statute. It is ingrained in the statute now. Source of source. So Deepak will have to prove, I took the loan from Bhartesh. And Bhartesh has to give a confirmation to Deepak. In turn, Deepak will give confirmation to me. Don't get surprised, it's already inbuilt in the section. Source of source is there. Then seventh proviso to 139(1) also says, my dear associate, you have no taxable income, very good. So you are not supposed to file return of income, but seventh proviso to 139(1), have you deposited 1 crore in current account? Yes, sir. It is assessee wise, not bank wise. Have you got any expenses for foreign trip of 2 lakhs? Yes, sir. Have you got any electricity payment for more than 1 lakh? Yes, sir. File the return of income. Seventh proviso to 139(1). So all this why I am telling you, these are all related to cash transactions. This is a broad overview. We will discuss issues also. We will discuss the section. Everywhere, 298 sections of the Act, everywhere you are hit by cash transaction indirectly without your knowledge. In fact, 269 ST is the most draconian provision. Suppose you are to give dowry. In course of survey or in course of search, you are going to tell, this is the dowry received from my father or my parents or whatever. That dowry, they will not tell, okay, you have received dowry, it's a gift from father or mother, but more than 2 lakh rupees. Therefore, 269 ST will be initiated in your hands, in the hands of the recipient, 100% penalty. Similarly, a partner may withdraw money from the firm. He is going to tell the source are there, sir. There is a source. It is out of my capital, which in turn is out of the salary earned, out of the interest earned, etc., etc. It is well sourced, sir. So we'll have to argue in the courts that partner and partnership, they are all, though there are separate legal entity, we'll have to, argue in the courts. R.M. Chidambaram Pillai Supreme Court, they are one. They are not different from each other. But as of today, 269 ST will be hit in the course of assessment proceedings because the faceless assessment now will be hit. They are going to tell you are receiving more than 2 lakh rupees cash withdrawal, or you are depositing, you are introducing source, you are introducing cash account debit credit to capital account in the firm's hands. Firm has received more than 2 lakh rupees, 100% penalty in the hands of the firm. Similarly, agricultural income, sir. Even agricultural income only is exempt, not the transaction between two agriculturists. What about your EMI home loan? What about your check discounting business? EMI home loan, the transaction event, etc. All this, will take up all the issues. I want a lot of issues. As and when this section is over, any number of issues we can try to deliberate within our time. Now we'll start the presentation quickly. Yes, sir, I told you this. Proviso to 139(1)(7) proviso. Be aware, sir. For cash deposits, there is a section itself introduced. Proviso 7, proviso to 139(1), which clearly says that if my dear associate has deposited 1 crore in one or more current account, it may be with any banking company or any cooperative bank, or you have incurred any expenditure exceeding 2 lakh rupees for travel to a foreign country, or any expenditure of 1 lakh rupees for electricity consumption, then you please pay return of income. I am more interested in the cash impact because my topic is cash transaction under the Act. Move further. Now 13 proviso to 10 within bracket 23C. Almost today if you see, this 10, 23C and this 11 and 12 almost on par, except for a few differences. Almost on par, they have been made on par. And now, next year they are going to bring up a common return. But next year they are not going to introduce probably because it takes time. The CPC is still, they are preparing the returns. Already, chairman has spoken to us, we have spoken to each other, and he has told that we want to have an interaction with all the CPC and all the commissioners here, including of the department here, Bangla, so that we can deliberate on all the problems which are now the associates are facing in e-filing. Probably that may happen next month. Anyway, so 13 proviso to 10 within bracket 23C and explanation 3 to 11(1). What it says? It is clear, sir. It says the provisions of 40IA or 40A, 40A3 or 40A3A shall mutatis mutandis apply for computing the income chargeable under the head P and profits and gains. So the section only is telling 40A3 and 40A3A shall mutatis mutandis apply even to this charitable trust, even to hospitals, even to educational institutions, as they apply to a businessman while computing his business income. What is 40A3A? Suppose there is salary payable to Pradesh. 1 lakh rupees. I did not pay. It is payable to Pradesh, fine sir, I claim the expenditure. Next year what I do, payable to Pradesh 1 lakh, I paid cash. That will be disallowed under 40A3A, rent payable. So that will be disallowed under 40A3A. Be careful. So now these provisions are also applicable to a charitable trust, both under 1023C as well as your regular charitable trust. Moving further. Now 13A is related to political parties. What about this, sir? So I told you, political party, they may have income under house property or other sources or capital gains or any voluntary contributions other than your electoral bonds. So these shall not be included in the total income of the political party subject to certain conditions. What are those conditions? Obviously, the political party maintains the books of accounts and other documents as it enables the assessing officer to correctly deduce the income therefrom. And in respect of each voluntary contribution, the political party would maintain a record, like your name, address, and of the person who has made the contribution. And the accounts of the political party are audited by a chartered accountant, obviously. Then D, very crucial, is limb D. No donation exceeding 2,000 rupees is received by such party otherwise than by account pay check drawn on a bank, account pay bank draft, or use of ECS electronic clearing system. Everywhere, same things will apply, sir. You can receive only by these three modes: account pay check, account pay draft, ECS electronic clearing system. That's all, nothing else. So if any political party receives any sum of rupees 2,000, in other than these three modes, income will not be exempt. My friends, they say your income will not be exempt. Now, move on further. 80D, your medical insurance premium, 25,000 in case of your individual, spouse, etc., and 50,000 in case of senior citizen, and then your health expenditure also 50,000, etc. All these should be paid only by an account pay check drawn on a bank. My friends, you are including your super senior citizen or senior citizen, etc. Otherwise, it will not be allowed as a deduction. Then moving further, 80G, 5D. Now 80G, you have given a donation, you are going to claim a deduction. We discussed that. Beyond 2,000, sir, if you want to claim deduction, kindly give only by these three modes: account pay check, account pay draft, or a ECS. What is ECS, sir? Rule 6A BBA. Newly introduced Rule 6A BBA. IMPS, NEFT, RTGS, then your beam pay, etc., etc. Government has given all the options. Move further. Now, 80G5D. 80G5D is crystal clear. No deduction shall be allowed under this section in respect of donation of any sum exceeding 2,000 rupees unless such sum is paid by any mode other than cash. Matters. Sir, 80GGA, reduction in respect of certain donations for scientific research or rural development. Same thing, sir. What is the limit? So here they are telling whatever sums you pay to a research association which has as its object of undertaking, scientific research to a university, college or other institution which are approved under 35(1), or a research association which has as its object undertaking of research in social science or statistical research, again to a university, college or other institution for research in social science or statistical research, and you have to be approved under 35(1) within bracket 3. Or to those institutions 35 CCA. What is it? Program of Rural Development. Then you move further, 35 AC. Public sector company or local authority or association or institution approved by National Committee for carrying out any eligible project or scheme, etc. Similarly, 35 CCB, natural resources, afforestation approved, conservation, etc. And then 35 CCA. Now again, 80 GGA 2A. No deduction shall be allowed under this section in respect of any sum exceeding 2,000 rupees unless such sum is paid by any mode other than cash. Matters. Crystal clear, sir. No deduction shall, word usage shall be allowed. No deduction shall be allowed unless such sum is paid by any mode other than cash. Now 80 GGB is the deduction in respect of contribution given by companies, only companies, sir. 80 GGB is only companies to political parties. So again, they are telling in this section is very stringent. They say no deduction will be allowed to the company even if you were to pay ₹1 to political party in any mode other than cash. 80 GGC. Here it is by any person to political party, but other than except local authority or artificial juridical person, wholly or partly funded by the government. Then you will get a deduction for amount of contribution to the political party or electoral trust. Same thing, proviso says nothing will be allowed in respect of any sum contributed by way of cash. Now 80JJAA, deduction in respect of employment of new employees. It is applicable to whom, sir? 80JJAA? Applicable to every tax audit assessee. Even individual can claim, sir, 80JJAA. Even HUF can claim. Every tax audit assessee, please utilize this. You will have to give an audit report. You can claim 80JJAA. Again, they are telling the condition: if you give even ₹1 of remuneration to your employee, what is the limit in this section is 25,000. If you were to give any remuneration in cash beyond 25,000, then I am not going to allow you deduction 80JJAA. This is to promote, for new employment, to promote the businessman. How much is the deduction, sir? 30% of additional employee cost. So it will apply to all assessees who are subject to tax audit in 44AB. What is the deduction? 30% of additional employee cost incurred in the course of such business during the year. And how to calculate, sir? For 3 assessment years, including assessment year, relevant to previous year in which such employment is provided, continuously will get. What suppose first year itself? That first year itself will be deemed to be the new assessment year. Then no deduction shall be allowed under this section if that business is formed by splitting up or reconstruction of an existing business, but it will not apply to the circumstances enshrined or laid down in 33B, that is your SIC industry, for re-establishment, reconstruction or revival of the SIC industry. Also, it will not apply to those businesses which are transferred from any other person as a result of any business reorganization. And additional employee cost means all the total emoluments paid to or payable to additional employees employed during the previous year. Now, that explanation B is important for me because my topic is again cash transactions. Emoluments, if they are paid otherwise than by account pay check or account pay bank draft or by use of ECS through a bank account or through such other electronic mode as may be prescribed. Provided in case of an existing business, additional employee cost shall be nil if you contravene this provision. Move further, sir. 35AD, expenditure in respect of specified business. We discussed that. 35AD is all for investment linked deductions. It was introduced from assessment year, 10-11, and 100% deduction is there for all the capital expenditure. Similarly, 43(1) is for all your actual cost. Now they are telling no deduction at 35AD shall be allowed in respect of payment or aggregate payment per day made to a person against such expenditure otherwise than by account pay check, account pay bank draft, use of ECS through a bank account, it exceeds 10,000 rupees. Similarly, 43(1) is actual cost. Amended to provide that, this is all from when, sir, amendment? Assessment year 18-19, 35AD and 43(1), that 10,000 rupees. Amended to provide that where an assessee incurs any expenditure for acquisition of an asset, in respect of which again payment or aggregate payment made to a person in a day, otherwise than by check or bank draft or electronic clearing system exceeds 10,000, such payment shall be ignored to determine the actual cost of such asset. Very, very simple provisions. Then 35ADF is important for me. Again, I am telling you my topic is only cash transactions under the Act. 35AD subsection 8 clause F. Any expenditure of capital nature shall not include any expenditure in respect of which payment or aggregate of payments made to a person in a day, otherwise than by account pay check drawn on a bank or account pay bank draft or ECS as may be prescribed exceeds 10,000 rupees. Or any expenditure incurred on acquisition of land, goodwill or financial instrument is okay. Now, 43(1). Again, proviso to 43(1). Provided where the assessee incurs any expenditure for acquisition of asset or any part thereof. Same thing, continue. In respect of a payment or aggregate of payment made to a person in a day. Very important, sir, aggregate of payment. When we come to 269 ST under second limb, here aggregate is used, aggregate of payment. In 269 ST second limb, single transaction, aggregate word is not used. In a day otherwise than by account pay check, account pay bank draft or use of ECS exceeds 10,000 rupees. Such expenditure shall be ignored. They say such expenditure shall be ignored for the purpose of determination of actual cost. Now, suppose I purchase land in cash example, that 35ADF, anyway, it will not enter my depreciation schedule at all because it's a non-depreciable asset. Section 50 also, is not applicable if depreciation is not claimed naturally. Now, what if the payment is outstanding at the end of the year? Suppose I purchased an asset, say 1 lakh rupees. I claimed depreciation. Next year I paid by cash. 43(1), I purchased asset. During year I did not pay. It was payable. Next year I made the payment by cash. So first year anyway I claimed depreciation. Next year I paid by cash. There is no section in the act, sir. Now the question arises whether the depreciation claimed earlier would be disallowed or not. There is no provision to add back the depreciation allowed earlier on account of payment made in cash. Then you will ask, what about 40A3A? 40A3A states that any expenditure allowed in the earlier year will be deemed as income of the previous year in which payment is made in cash. In this case, I never claimed as expenditure at all. It was not claimed as expenditure basically. However, the same provisions are not applicable for the depreciation allowed earlier. There is no, as on date, there is no proviso or no explanation. But we are telling you to avoid all these ingenious ways of planning because of 271J in the Act. Now what is it? 271J of the Act is 10,000 penalty. Incorrect tax audit report. Now 40A3 or 40A3A. Now 1968 40A3, it was introduced way back in 1968. This provision, why it was introduced? Designed to counter evasion of tax through claims for expenditure shown to have been incurred in cash with a view to frustrating proper investigation by department as to the identity of the payee and reasonableness of the payment. This is as per the memorandum in 1968 introduced. Now, 40A3, please see the section, sir. Where the assessee incurs any expenditure in respect of which a payment or aggregate of payment made to a person in a day, otherwise than by account pay check drawn on a bank or through electronic clearing system, exceeds 10,000, no deduction shall be allowed in respect of such expenditure. Tell me, sir, what is the confusion here? 40A3. Any questions? Any question till now on all the 10 provisions covered? Any question on all the 10 provisions covered till now? Or any question on 40A3? Then we'll move further. Yes, sir. Continue.
The number of employees I have in the previous year were 100, and I've employed 5 employees in this year, but they have not completed 240 days. So I'm not eligible for any.
Next year they should have completed.
Yeah, but when you fill the form, it asks you for opening employees and closing employees.
Yeah.
So this year's closing employees is how much? Because 100 employees was opening, 5 employees joined, but they did not complete 240 days, so they are not counted as additional employees. So now my closing employees for this year is 105 or 100?
It's 105 only, sir, actually.
So the problem is, then the next year, sir, I have got no new employees.
Correct.
So
but what the law says, I can tell you.
So the next year what is happening in our case is 105 minus 105, 0 employees.
Correct. No, but this is the practical issue. But according to me, you should take 105 only.
Sir, one situation.
But there is a section is clear, no? In the next year, you need to complete the 240 days, balance days.
No, they're completing 240 days, but I'm not able to take deduction, sir. Can you think like this, sir? The additional employees, because it's not considered for the calculation of that, I will also not consider it for the calculation of my closing employees, because they are not new employees only.
That is a procedural matter actually. But the act is clear. Any other point, sir? 40A3, what is your doubt? 50,000 salary to Deepak per month. 50,000 salary to Deepak. Can I pay 5,000 daily? I am paying by cash. 10 payments can I make to Deepak 5,000 each? In a day can I make at different points of time? Or daily can I make Monday to Sunday? What is your opinion? What is your opinion, members? Or rather, what are you doing in the books at least? 50,000 salary I am paying, sir. Are you debiting daily 10,000 if you are paying by cash? Or different points of time in a single day? What is your opinion? Yes, sir? We are all paying by check only, sir. No question of cash. There is no violation at all. Anyway, we will see the issues also. Now, provided no disallowance shall be made and no payment shall be deemed to be the profits and gains of business or profession under subsection 3 and this subsection, where a payment or aggregate of payment made to a person in a day otherwise than by account pay check drawn on a bank or use of ECS, in such cases under such circumstances as may be prescribed, having regard to nature and extent of banking facilities available, consideration of business expediency and other relevant factors. Sir, section only is giving me a hint, sir. I can fight for the client. Why did you make cash payment? Sir, because of certain circumstances. Then, having regard to nature and extent of banking facilities available. In a remote village, I purchased agriculture land. I don't have banking facilities. It's a genuine. Some remote village of Rajasthan, I went and purchased the land. The farmer is telling there, otherwise the farmer will not come for registration again. And there are no banking facilities. He's telling you, give me the cash. I am giving you my Aadhaar card. I am going to come in front of the sub-registrar. I am going to give you the cash and you can register the deed. So the section itself is telling, such case and circumstances has been prescribed. That is your Rule 6DD. Having regard to nature and extent of banking facilities available, consideration of business expediency. The seller insists on the payment in cash. What I can do? The seller insists on payment in cash from buyer. I will give you discount. I will give you cash rebate, etc. Typical business consideration. Section itself is telling, sir, business expediency and relevant factors. So, bona fide, genuine payment. You want to levy 100% penalty? Sir, suppose I have paid 12,000 in cash. How much is penalty, sir? 12,000 minus 10 on 2,000 or entire 12,000? What is your opinion? I paid salary to Deepak 12,000 in cash. It is debited in books. So what you will disallow on 48 is 12,000 minus 10,000 or entire 12,000? Entire 12,000. But SRS office case, SRS referred his one case to Chaitanya. He won in the High Court. Shankar Kolivada, 12,000 minus 10,000 on 2,000 only. Don't take this and don't do tax planning. SRS case, referred by SRS to Chaitanya. He went to High Court, won the case. 12,000 minus 10,000 on 2,000 only. But that may not be the correct law. We will see, sir, various other cases. What about your goods transport carriages, leasing goods transport carriages? That fellow will drive the lorry. I mean, lorry is coming from Bihar in the night. Bihar, Bombay, Delhi, Calcutta, night 12 o'clock, 1 o'clock it will land. You will tell, no, give me check. No, I will pay only by check. I cannot pay cash karke. Again, he has to travel back to Bihar, Delhi, Bombay, Calcutta, 1,500 kilometers, etc. He has to fill up the petrol, diesel, oil, etc. He has to stand, eat, drink, etc. at roadside dhaba, etc. Where is the money, sir? So 48.3, there are Rule 6DD, etc. They say, yes, we understand karke. So that way is the limit there. Instead of 10,000 is 35,000. That is untouched. That 35,000 is untouched. I think 4 years back, there was a meeting there. Justice R. Vishwar committee, they wanted to simplify the act and new act was being made. New direct tax code. That time they invited all of us. So the chairman sent myself and Mr. Padam, we went to the Sri Krishna Hall in Queens Road. Then, the Justice R. Vishwar himself was there and all other members, including Principal Chief Commissioner, Mumbai was there. So in the tea break, I just happened to sit with the Principal Chief Commissioner and I started, as though I thought only I know the law, I started telling him, what sir, 48.3, only 20,000, 10,000, 20,000 limit? What 269 SS, 269T, only 20,000 limit? All these are introduced in 1984, sir, so many years over. Today, at least make it 1 lakh karke. Then the Honorable Principal Chief Commissioner Mumbai told me, no, Naveen, next year it is going to reduce further karke. Again, I thought what he knows, I only know karke. I also smiled like you and I came out. Next year that 20,000 became 10,000. He told me, no, this only as a courtesy government is giving that. They don't want karke, digital. Because when Modi took over as the premier of this great country, within 1 month, he formed what is called Special Investigation Team. Special Investigation Team gave a suggestion. Sir, don't allow in India any cash transaction beyond 3 lakhs. That Arun Jaitley took that, reduced it to 2 lakhs and was born section 269 ST. 269 ST section is born. They reduced that 3 lakhs to 2 lakh rupees. Violation of 269 ST will result in penalty of 100% and 271 DA. 100% penalty, sir. We will see those illustrations also. Now, 40A3, I have given some illustrations also. You can see, some genuine case laws also here. Athar Singh, Gurumukh Singh, Supreme Court itself says, if it's a genuine bona fide transaction, though in cash beyond 10,000, I have no problem, sir. I don't have to levy penalty. You prove to me it's a genuine transaction, prove to me it's a bona fide transaction, I am not going to levy penalty. So Supreme Court is telling, when they are discussing the constitution validity of 40A3, they said this is not arbitrary, sir, and this does not amount to a restriction on the fundamental right to carry on a business. If read together with Rule 6DD of the rules, it will be clear that these provisions are not intended to restrict business activities. We don't want to restrict their business activities. What is it? It is only payment which is not made by a cross check or cross draft. That is why the assessing officer wants to disallow. The payment of cross check or cross draft is insisted upon to enable the assessing authority to ascertain whether the payment was genuine or whether it was out of income from undisclosed sources. Therefore, he says it will be clear from provisions of 40A3 and Rule 6DD that they are here intended to regulate business transaction and to prevent use of unaccounted money and reduce the chances to use black money for business transactions. Similarly, you see this Punjab and Haryana High Court in Gurdas Garg. Very interesting decision, Gurdas Garg, Punjab and Haryana High Court. In this, what happened? They purchased this agriculture land. So assessee brought all the pays. Identity of the pays, sir, I am establishing. Yes, all transactions are through other than banking channel. It's all through cash. He got all the pays. I am getting all the pays, sir. Identity of the pays is proved. Court accepted. Fine, sir. Karke. Sale deeds were produced. Genuineness is accepted. Amount paid in respect of each of these agreements are certified by stamp registration authority. CIT held the transactions to be genuine. Accordingly, CIT held that the bar against the grant of deduction 40A3 was not attracted. Then it went to tribunal. Tribunal did not upset these findings, including as to the genuineness and correctness of transaction. Tribunal is telling, no, I agree this is genuine. I agree this is correct. But it is a violation of 40A3 because you have not paid by an account pay check drawn on a bank. Merely for that reason, they confirm the disallowance. Tribunal disallowed the same, which High Court reversed it. So also important to note that tribunal noted the contention on behalf of the appellant that there was a boom in the real estate market. Tribunal is telling, yes, sir, there was a boom in real estate market. And it was necessary to conclude the transaction at the earliest and not to postpone them. And therefore, the appellant did not know the vendors and obviously, therefore, he insisted for payment in cash. And that as a result thereof, payments had to be made immediately to settle the deals. Tribunal did not doubt this case. But I told you they made the addition solely because it was not paid by account pay check drawn on a bank. Now, so therefore, High Court has now allowed the matter. What the High Court is telling, at the cost of repetition, Tribunal did not disbelieve the transactions or genuineness thereof, nor has it disbelieved the fact of payment having been made. More important to the High Court, reasons furnished by appellant for having made the cash payment, which we have already adverted to, have not been disbelieved. In our view, assuming these reasons to be correct, they clearly make out a case for business expediency. In the circumstances, the order of the tribunal in this regard is set aside. Payments cannot be disallowed under 40A3 of the Act. This is the decision of the Punjab and Haryana High Court. Move further. Now again, one more important High Court, Punjab and Haryana High Court. Lot of beautiful judgments are there in Shelley Pasi. What it says, cash payments, when ultimately such amounts are deposited in the bank by the payee, and payee is identifiable, I am not going to levy penalty. Although the payee has directly deposited cash in my bank account, but they are identifiable. So High Court is telling, okay, I am not going to levy penalty on you. Similarly, Kerala High Court in Kirti Agro Mills, the High Court is telling, please don't read section 40A3 in isolation or to exclusion of Rule 6DD. Please read the section along with the rule. If read together, it will be clear that the provisions are not intended to restrict business activities at all. The terms of 40A3 are not absolute. Consideration of business expediency and other relevant factors are not excluded. The genuine and bona fide transactions are not taken out of the sweep of the section. High courts have been, benevolent here. You prove the genuineness. You prove the bona fides of the payment. Identify the payees. They are telling, fine, we are not going to levy the penalty, sir. Penalty is very harsh. Straight away 100%. Move forward. Both expenditure and payment must exceed 10,000. Okay. Acquisition of stock in trade and raw materials. Is it an expenditure? Purchase of stock in trade, sir? Is a violation of 40A3 if purchased in cash? Yes, sir? Purchases. Purchases of raw materials, stock in trade, they say. So in this judgment, they are telling expenditure, the word has not been defined in the act. It's a word of wide import. It includes all outgoings debited to your trading account and profit and loss account, of which forms purchases. Therefore, 40A3 will necessarily apply even to the purchases. The expenditure for purchasing stock in trade is one of such outgoing. Value of stock in trade has to be taken into account while determining the gross profit under section 28 on principles of commercial accounting. Payments made for purchases would also be covered by the word expenditure. Therefore, 40A3 is therefore attracted to payments made for acquiring stock in trade and other materials. Presumptive taxation, very interesting. So whether 40A3 would apply to 44AD? Whether 40A3 would apply to a case of 44AD? 44AD you declared, sir, 6% or 8% as the case may be. Case is picked up for scrutiny. In the course of scrutiny, assessing officer found out, verified, yes, 40A3 is attracted, payments made, rent paid, you paid in cash. I want to disallow. Possible, not possible? Not possible, sir. It begins with a non-obstante clause, notwithstanding anything to the contrary contained in section 28 to 43. See, the only difference between 44AD is the word contrary is not there. Same thing it will start, 44AD, 44ADA. Notwithstanding anything to the contrary contained in 28 to 43. See, the word contrary is missing in 44ADA. What is the reason? What is the difference? Earlier to 16, that 40B, interest and salary were allowed in case of 44AD. Therefore, in 44ADA, it was not there at all. Therefore, no question of contrary. Because again, 44AD2, what will tell? Section 30 to 37 deemed to be allowed. Anyway, so it is clear, sir, it is crystal clear. You cannot make 40A3 disallowance in all 44AD cases, in all 44ADA cases. Move forward. Now there is a search, there is a survey. Unaccounted cash purchases are there. Can they make a disallowance on 40A3, sir? 40A3 in course of a search, they found out, they have proved. On verification, they say 40A3, I am going to disallow karke. Is it possible? Not possible. What is your opinion? In case of a search or, unaccounted sales is there, unaccounted purchases are also there, sir. There are unaccounted expenses also. So can the assessing officer invoke 40A3? What is your opinion? Now it is going to start, sir. Power of survey is also given to Koramangala department now. Earlier it was only with the wing in Queens Road. Now all these officers are getting ready. Even the Koramangala officers are getting ready for survey. Next 3 months, if there is no hike or spike in COVID cases, there are going to be surveys daily, sir, till 31st March. Welcome the new year with a spate of surveys. All the powers which was there with wing only in Queens Road, even it has now been shifted to Koramangala officers. All the officers have prepared 1 file each. They have given to their additionals. So expect this. As and when they come for survey, what is your answer, sir? Can they invoke 40A3? Okay, as you told, net profit or gross profit? That is unaccounted purchases, unaccounted sales. What can be taxed is not sales, only your net profit or gross profit. There are whole lot of judgments. Whether 40A3 can be invoked? No, they say. You have rejected books of accounts, you have determined profit at a flat rate. Now you want to make 40A3, it is not possible at all. There are many judgments here. If you see, no addition can be made on 40A3 where income has to be computed by applying net profit rate. No disallowance on 40A3 is warranted when income is estimated. The mantra is you are estimating my income. Based on my gross profit or net profit in the previous year in course of search, it may be 2%, 3%, etc. You are estimating it. Now you want to make, after estimating my profits, without rejecting my books of accounts, or after rejecting my books of accounts, you estimated profit, GPA, whether in the course of search or even whether regular books are there. But now you want to make a 40A3, it's already ingrained, merged, subsumed in that net profit. These are what the courts are telling. You can't make again addition under 40A3. If you see here, very beautiful judgment of Pune ITAT in Narendra Mithailal Agarwal. He has relied on 11 judgments there. There are 5 High Court judgments and around 4 High Court judgments and 7 or 8 tribunal judgments. The court, this ITAT is relied on all these judgments and telling, no, it's not possible. If you see, yes, the decision of the ITAT, various decisions of honorable high courts have laid down that there is no application of 40A3 if income is estimated, applying gross profit rate as discussed above. In fact, these decisions were rendered even in cases where regular books were maintained. Whereas in the instant case, assessee's business was unaccounted and purchases and sales were gathered based on seized documents, and income was arriving at applying fixed gross profit rate without considering purchases, as can be observed from the statement filed at the time of assessment proceedings. Therefore, principles laid down by various high courts apply to the facts of the present case. Accordingly, they deleted the addition made by assessing officer under 40A3 of the Act, which has been opposed by the revenue before us. Now, if you see, there was only one judgment which was against. That also they have covered in this. It has held by various high courts that and tribunal, no dissonance 40A3 is called for when income was estimated by applying GP rate or NP rate. The tribunal is also telling, we are also aware of Honorable Gujarat High Court in Hainoop Food and Industries, where contrary view was taken. And once there is a divergent view, the view in favor of the assessee has to be followed as held by Honorable Supreme Court in Vegetable Products Limited, 88 ITR 192 Supreme Court. In view of this, the CIT appeals in our position, in our opinion, was factually legally justified in holding that the dissonance of 69 lakhs under 40A3 was not correct in the present faction case. Same was rightly directed to be deleted. Be very careful in course of next survey and search. Sworn statement is very important at 132.4 or 131. Whatever you record, sworn statement very, very important. Secondly, they are going to invoke, suppose they have found a diary. They have found a diary in which there are 10 names. Suppose Naveen, Deepak, Bhartesh, etc. to 3 lakhs, 3 lakhs, 3 lakhs. So they are going to take the total example. They are going to tell the 60 lakh rupees. You are a real estate developer. And these are the names of the clients. 3 lakhs, 3 lakhs, 3 lakhs you have received on money. There are 10 payments of 3 lakhs each, it became 30 lakhs. That 30 lakhs they want to add as income. They will tell 68 cash credit, etc. Then they are going to invoke 269 ST also. They will tell, no, you received by other than cash more than 2 lakhs, 100% penalty. So 30 lakhs as income plus 30 lakhs 269 ST. And that cash credit of 30 lakhs, they may also invoke 271 DA, telling that it is 115 BBE. So what will happen? 160% it will go. 60, 160. So therefore be careful in the case of survey, it is not now 68 cash credit, 69 unexplained investments, etc. 69 AB, your partly disclosed money, bullion, jewelry, etc. 69C, unexplained expenditure. 69D is inconsequential, amount borrowed or repaid by hundi. No more such cases are there. These 5 sections, if they are invoked in the course of survey or search, read with 115 BBA. Why survey or search? Anytime they invoke, read with 115 BBA, tax rate will jump to 60%. Therefore, be careful. If they are coming for survey, please see to it, if any addition is made, let it be not under these 5 sections. Thereby what will happen? Always you should tell business income, business income. If you tell business income, regular rate of tax. Don't tell 68, 69. You should not record those sections there. Request the assessing officer there, that much at least damage will be less. So 68 to 69D, if it's not invoked, 115 BB is out, sir. 30% business. We move forward. I recognize the presence of our Chief Commissioner of Income Tax, Bangalore to Shri Prashant Bhushan, sir. I request the chairman to escort him on the stage, sir. I could take another 5-7 minutes and conclude my session. So we'll go to the last section now. (269 ST will discuss for 5-10 minutes and then break for tea. So as I told you, my dear friends, this is the most important amendment made by the BJP government since coming to power in 2014. Now, the section is, very short. If you see, it starts, no person shall receive an amount of 2 lakh rupees or more. Then there are 3 limbs, 2 lakh rupees or more. First limb says in aggregate from a person in a day. For example, the sale bill is 3 lakh rupees. So in aggregate from a person in a day, a person in a day. So we can't tell, a person which we used to analyze in 54F, KG Rukmani Amma Anand Basapa's case. A includes any, singular includes plural, etc. One house. That is why that amendment was made. One house in India. So Jaitley told, my English is very poor. I cannot match with you chartered accountants. I am a lawyer. So that a house, I am going to make it, I'll remove a and I'll make it one. One house. And then in India we added. Because we used to sell property here, invest in Sri Lanka, claim 54F. So I remember that then, Joint Commissioner was there. Now Shivanand Kalkari was there. So because of the judgment was there, we won the case. Then he told, per se, I don't agree with you. Because this section, if you have to sell a property, please, you should invest in India. Anyway, that word in India was missing at that time. So therefore, purchase a property here, sell a property here, invest in Sri Lanka. At that time, I remember, we won the case because those words were missing. So thereafter, in that budget, A was removed, ONE1 came, and then the word in India was also added. So here, in aggregate from a person in a day. So therefore, if 3 lakhs rupees is the bill, happily 1,99,999 you can receive cash, no problem. Balance you have to, should and must receive in only those 3 modes. Either account pay check, account pay bank draft or ECS, nothing else. Then in respect of a single transaction, quite tricky sir, this will go to High Court. This has to go to High Court, it will go to High Court. I will tell you the reason. In aggregate from a person in a day, understandable. In respect of a single transaction, we'll discuss. Come to see, in respect of transactions relating to one event or occasion from a person. What do you mean by here, occasion or event from a person? See the word person, a person is missing in limb B. A person is missing in respect of a single transaction. Now suppose I've entered into 10 transactions, 10 sales are there, 1,50,000, 1,50,000, 1,50,000, 1,50,000. Last says in respect of a single transaction, it stops. Suppose I were to take 1,50,000, 10 sale bills in a day, 1,50,000 into 10, 15 lakh rupees. The first section in aggregate from a person in a day, it bars me. In respect of a single transaction, now 6 lakh rupees is the bill. Example, can I take 1,50,000 today, 1,50,000 tomorrow over a period of 4 days? Think over the matter. Why the word in aggregate is missing here? Why isn't it possible? 6 lakhs is the bill, 1,50,000 per day, over a period of 4 days I am going to take. In aggregate is missing here, from a person is also missing. It only says in respect of a single transaction. Intent, maybe the intent and purpose and object of law, maybe that in respect of a single transaction, that 6 lakhs bill, you cannot prevent, circumvent over a period of 4 days. But in my opinion, see that the word in aggregate is missing, from a person is missing. In respect of a transaction relating to one event or occasion from a person. What is an event or occasion? Say for example, the marriage. There are various, events leading to a marriage. Say you're in a typical South Indian wedding, start from haldi or, nishchitartham, reception, marriage, etc. Over a period of 4 days, then it ultimately leads to marriage. So here the law says you are going to receive gifts now. So probably, on the day of the marriage, you can receive 1 crore gifts, example. But it says in respect of transaction relating to one event or occasion from a person. So probably if you are receiving gift 2 lakhs and above, but it says one event, only one event or occasion from a person. We'll see the issues also. Provided that the provisional section shall not apply to any receipt by government, any banking company, post office savings bank, cooperative bank. But in the SS and T, it is there other than a cooperative society. Cooperative bank, but not a cooperative society, you'll have to be careful there. Then this section does not apply to a transaction referred to in 269 SS, meaning to say, it does not only, it only applies, does not apply to 269 SS, but there is no bar on 269 T. I took a loan of 3 lakh rupees, acceptance. When I repaid the T, they are telling T will also apply. The recipient anyway, when he gets 3 lakh rupees, 269 ST is there more than 2 lakhs. And then T, There is no exception. It only says transaction of nature referred to in SS but not T. Yes, sir. 271 DA. A person receives any sum. The section says no person shall receive amount. But this says any sum. The section uses the word there amount. This uses the word any sum. In contravention of the provisions of ST. He shall be liable to pay by way of penalty, etc. Provided no penalty shall be imposable if such person proves there were good and sufficient reason. And any penalty imposable under subsection 1 shall be imposed by joint commissioner. Lack of time, that 269 SS and T, the penalty leviable is under 271D and 271E, 100% penalty. Read section 275(1), subsection 275(1)A, 1B, 1C. Always question that. What is the time limit for issue of a penalty proceedings? So in case there it is 1 year from the end of financial year or 6 months, whichever is later. There you have to be careful there. Whenever penalty is initiated under D and D, please read the time limit. Yes, sir. These are all transactions where, inadvertently you may be hit by 269 ST. For example, sale proceeds of goods, proceeds of services, sale proceeds of movable properties, fees, remuneration, salary, brokerage, etc. Advance against sale of goods, provision of service, advance against sale of immovable property, recovery of loan given and interest not covered presently in SS, donation received by trust, etc. Advance taken by partner of a firm, withdrawal of capital profit by a partner of a firm, introduction of capital by partner, issue of share capital, gifts received from relatives, non-relatives, amounts received by hospitals, educational institutions, etc. Now, transaction of loan or deposit between agriculturists may be exempt under 269 ST, but other transactions between agriculturists are not exempt under ST. Straight away we will go to the notification and then stop. Yes, sir. Regarding clarification on cash sale of agricultural produce by cultivators and agriculturists. There is a board circular, 3rd November 2017. It talks about 40A3 as well as your 269 ST. What it says, very clear, sir, it is. Representations have been received for what? Regarding application of the provision to cash sale of agricultural produce by cultivators or agriculturists to traders. Cultivators to traders. Now, what the circular is telling? Therefore, any cash sale of an amount of 2 lakh rupees or more by a cultivator of agricultural produce is prohibited under 269 ST. In view of the above, it is now clarified that cash sale of agricultural produce by its cultivator to a trader for an amount less than 2 lakhs, it will not result in any disallowance or expenditure under 40A3, no problem. Also, it will not attract prohibition under 269 ST. And anyway, where there is no PAN, you need to give your Form 60. So be careful, there is this board circular. Beyond 2 lakhs, they are telling cultivator of agricultural produce also, it is prohibited, any cash sale. Why? They are telling go for account pay, check, draft or use of electronic clearing systems. So round about 15 sections we discussed. And I thank all the members for a very patient hearing. Thank you very much.
We had an excellent session. I thank Naveen Khariwal sir on behalf of Bangalore branch of ICA for his time and effort sharing his knowledge. I request our committee member Manjunath Hallu to present a memento to the speaker as a token of gratitude and respect.